Hello again. It's Friday, May 2nd, 2025, and just coming back to look at this. The the one we rolled to doesn't expire till May 16th, so got a couple of weeks to go on that. And just waiting it out, so just wanted to go over a couple of things. Finally get a I guess opportunity to look at things more generally instead of just doing a trade. Uh, So if you're wondering why I started with $1,000, it's basically just a round number that I figured is pretty accessible to a lot of people. I mean, not everyone has $1,000 extra, but most people, if you put your mind to it, you could, over a period of time, save up $1,000 that you could put toward investing. Which the whole point of this is to demonstrate why you might want to do that and why you might want to potentially do the type of options trading that I'm doing. So generally, when I'm looking at this, I'm getting like $16 each week, which sounds like very little. And we're talking about like one, two, I think the highest I got was like 6%. And that doesn't sound like much. But if we take a look at this is thecalculatorsite.com. Uh, there's a lot of other places, but I like using this one. This one my brother showed me. If we look at compound interest, say we start with $1,000 like we have, and I think I mentioned when I started out that I kind of figure I believe I can average 1% per week. When things go down like they did recently, it's not going to be that good necessarily. When things are good, I baseline like to go for at least 2%. But I figure year over year, week after week, I can average 1% probably. So let's go ahead and put in 1% and do weekly, and we'll just compound it monthly. That's fine. And let's see. I'm not doing any more deposits. Obviously, if you are able to continue depositing, that's going to accelerate things. But say you're starting with $1,000 like I did, doing something similar, and you get similar to what I expect uh, on average. So let's see, after 5 years, wind up with $12,000. That's not bad. I mean, from your $1,000, your annual percent, they bring it out to 66%. If you're just doing it simply, I figure you could get at least 50% doing this type of thing, which is just like rock star level uh, average returns compared to like the market in general, the stock market that is, and typical, like, if you put it in a mutual fund or something, if you average 12%, they figure that's really good. They being like financial advisors and investors and things like that. So, I mean, even if you just figure it is 50%, and if you're just half as good as that, just 25%, that's still like double what would be considered a good rate. So it just kind of demonstrates, say, I mean, most people starting a retirement fund or something, would have more than 5 years. Say bring it out 10 years, and now your $1,000 is over $160,000. So I mean, if you start like in your 20s and you work 40 years, I mean, doing that, obviously you're going to be able to put more in over the course of that 20 years than just 1,000. But we'll start out. I mean, once you get higher amounts, your ability to make those returns is going to decline, at least with this type of investing, because you're going to be, I mean, this is just absurd. That's nearly $700 billion. But so the problem with higher amounts is when you start trying to make a trade and move, then instead of you making your move, you're moving the entire market, and it kind of turns against you. Which is why Warren Buffett says that he did better back in the day when he had less money to work with than he does now, that as far as percentages. But I mean, if you got anywhere close to this, obviously you'd be shifting more towards preserving what you have instead of trying to gain more. But let's go a little more reasonable, just to 20 years. I mean, the 5 years, I mean, obviously that was a really good return on just $1,000. But if you're able to do it for 20 years, and that's just assuming that you only had this $1,000 to start out and you couldn't ever put any more in. Of course, this is assuming also that you pay the taxes on it. So, which that's what I plan to do, is just cash flow the taxes and not withdraw any from the account to pay the taxes. But you can even do this in, if you get the right platform or brokerage, you can do this in like a Roth IRA and do it tax free. And then you wouldn't have to worry about paying taxes on your gains. And you could wind up with something similar to this over 20 years. I mean, just imagine if you only did half as good as that. Would that be okay for you? With only $12,000 to retire, or sorry, $12 million to retire with? I mean, I'd be okay with that. But that just, I mean, sometimes it's good to just take a step back and look at the big picture, because making a trade, it takes me literally just a few minutes to look around, make a trade. But week over week, if you look at like $16, it doesn't seem like much. But if you look at percentage wise, that's actually a lot. That's over 1% on our $1,000 portfolio. So, and then you wind up with stuff like this. Anyway, that's kind of what I had on my mind. I'll try to put out another video next week, and then a couple of weeks we'll be able to reevaluate where we're at, and then hopefully be able to roll it up again. But that's it for today. Talk to you later. Thanks. Bye. Remember to like, comment, and subscribe. Oh!